Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers held ES above the key support at 1992 and ran it back up towards the all-time high and back into the 02 to 03 quarter resistance level. At this point, heading into the day, the buy side is clearly in control, and as long as we can hold above 92 to 94, that bullish bias can continue. And ideally, if we're going to get an upside break above 03 quarter, then the market actually holds above 97 to 98. Now, ES is set to make a new all-time high, or at least a marginal all-time high on the day time frame today. And the other markets are at this time, playing catch up. But the possibility of a trend up day seems a bit low simply because of options expiration and quadruple witching tomorrow. Typically, we don't get big directional movement and trend type movement ahead of options expiration, especially when it's quadruple witching. So for that reason, even though our bias is to the upside, we do want to be a bit careful and nimble with our exits. And if the market starts to chop around a bit, then we need to get more selective and tighten up our risk management. So, on the day time frame, the bias is going to be firmly bullish above 97 to 98, and buyers can still maintain control above 92 to 94. A break of 92 to 94 would tell you that this is more of a range-bound, balance type market. It doesn't necessarily mean that sellers are in control. It just means that the market is not quite ready to rally to new all-time highs just yet. Below 92, we have the bull bear zone at 86.5 to 88.5, and that's really the key spot that's going to be deciding the overall directional bias. So as long as the market holds above 86.5 to 88.5, bigger picture, buyers can still maintain control. So even if we did pull back there, which if the buyers are really going to be stepping in, then we shouldn't. But in the event that we even got a pullback and we started seeing weakness intraday, then we could just get a balanced type session and the market can balance above 92 to 94, or if the market's weak, it can balance above 86.5 to 88.5. On the upside, the market can still make a marginal high, and by marginal, I don't mean just by one or two ticks. I think we can go a few points higher than the 03 quarter current all-time high, but again, I don't think it's going to be a trend day, right? I think that even if we push to a new high, we could stop at the 08 quarter to 2010 quarter resistance. Now we do have to keep in mind that there is no hard resistance above 03 quarter, right? But based on the recent ranges and the type of volatility we're seeing, and the fact that we have again option expiration tomorrow, I think the 08 quarter to 10 quarter spot could actually limit the upside short term, and the market can simply balance at some higher prices. So the focus is still going to be more on the long side, especially above 97, 98, and 92, 94. But we're just going to be a bit more flexible and nimble with our exits. And then if we start to see that the market's just chopping around and not really doing much, then we'll just have to be more selective with our trade location and where we decide to enter the market. But as far as directional control goes, the buy side is still in control. We are at a short-term inflection point here, and we should get some real directional conviction over the next 2 or 3 trading sessions. But because of options expiration, there could be a little bit of back and forth. Looking at the other markets, NQ also held above its key support, which was 58 to 62, and then rallied up towards yesterday's high. So all these markets are still holding up pretty well, and the buy side has still maintained control. So unless we see something drastically different on the day time frame, right, where we just get a big rejection bar going to the downside, or we notice that the momentum is just not there, or it's actually to the downside, that's the only time where we'll need to adjust our bias and be a bit more cautious, or perhaps even look for short setups. But unless we see some clear signs of aggressive sellers stepping in the market, the focus is going to remain more on the long side, and we will look for a retest of 2003 quarter and a break above that area to at least make a marginal high that's a few points higher than 03 quarter. So those are our main thoughts as far as price action goes. On the econ calendar, the Philly Fed survey at 9 a.m. Central is really the only potential catalyst. So just be aware of that. There could be some movement around that time frame, around 9 a.m. Central. But aside from that, the buy side still is very much in control. And again, if we can hold above 97, 98, we'll know that there's some directional conviction in this market, and it would tell us that there are some strong buyers active. If we get a pullback below 97, 98, the market bias still remains the same, but perhaps the market is not, super strong where it can just rally to, new highs today. So those are our main ideas. Let's see how well the buyers hold it up, and we'll take it from there.